And Mark, I want to hear your thoughts on this because I get it. I love the sentiment of being able to stick it to the hedge funds, and what the hedge funds have been able to do in some cases has been really, really bad news. But if you're manipulating market prices, I don't see how that's a good thing really in any scenario.
How's this any different than what every brokerage firm does? You know, we've been talking about get long, get loud for
it's not good.
Right?
It's not good for the brokerages to be doing that at all.
How's it going, guys? Lee here. So in this video, we're going to be covering Mark Cuban's interview on CNBC and his thoughts behind Robinhood, AMC, GameStop, all the other businesses that have been highly shorted and that retail investors, are going into quite heavily at the moment. Now, Mark Cuban, amongst Chamath, is one of the people that I really respect in the space, and I think a lot of people can empathize with that as well. So I'm really keen to hear his inputs and what he thinks about it. I have a feeling it'll be very similar, just given what I've seen on Shark Tank. He loves competition, he loves entrepreneurship, he loves transparency and removing any barriers, any frictions to be able to have more participants within the market. So I wouldn't be surprised if that's what we get in this interview here. Let's get into it.
Billionaire entrepreneur Mark Cuban says that he's actually a big fan of what's playing out between retail investors and hedge funds around shares of GameStop. Users of Reddit's Wall Street Bets forum have helped bid that stock up massively this week. Last night, Cuban tweeted, "I've got to say I love what is going on with hashtag Wall Street Bets. All of those years of high-frequency traders, front-running retail traders, now speed and density of information and retail trading is giving the little guy an edge. Even my 11-year-old traded with them and made money." Mark, of course, as you know, is also the owner of the NBA's Dallas Mavericks, and he joins us right now on the Squawk Newsline. And Mark, I want to hear your thoughts on this because I get it. I love the sentiment of being able to stick it to the hedge funds, and what the hedge funds have been able to do in some cases has been really, really bad news. But if you're manipulating market prices, I don't see how that's a good thing really in any scenario.
How's this any different than what every brokerage firm does? You know, we've been talking about get long, get loud for
generations. It's not good.
Right?
It's not good for the brokerages to be doing that at all.
And you can see here, Mark is absolutely bang on. Good on you, Cuban. Absolutely calling it out for what it is. We've got Wall Street manipulating prices with billions and billions and billions of dollars and being able to shift prices in certain companies in whichever way they want. And now the retail guy comes in, has a little bit of a go, screws with Wall Street just a little bit, win a couple stocks here and there, and then now they start freaking out. What the heck? They don't call it out. Cuban's going to call it out, and yeah, let's get straight back into it. This is really good.
I'm not defending that. It's just when you see moves like this, it's a little crazy. And I wonder what Doug Parker is thinking. I wish we could get him back on to ask him what he thinks about his stock being up better than 50%, because I would think that makes a company pretty hard to run, too. How do you live up to those expectations now?
Oh, but they're not expectations at all. I mean, look, the reality is you just have to run your company and do your best. It doesn't change the fundamentals of the company at all. You know, it so many respects is window dressing. And if you are an owner of American Airlines, if you're an owner of GameStop, hopefully, prior to all this, hopefully you owned it for a good reason and you believe in the company. And all the not even manipulation, all the swings in the price of the stock, it's all just mishigas, right? I mean, if it's a good company, it's a good company. If it's a bad company, it'll end up going out of business. And, the people who, bought it just to speculate, some will make money, some will lose money. But that's just the way the market's always worked.
I mean, can the man spit any harder facts? That's how the market is. I mean, we talk a lot about retail investors, some of them losing a lot of money. Yes, they're taking the risk to go into this crazy frenzy at the moment, and some will win and some will lose. Another interesting point, and I can't believe that they even asked this as a question, was of course it doesn't change the fundamentals of how the business and the company runs. The only thing that you could probably do with share prices going up is actually leverage that and then get a loan out or some extra cash for the company, which is what I think Hertz did when their share price went up drastically, and the courts kind of said no to all of that. But here, GameStop is going to go up, they're going to go down, AMC is going to go up, going to go down, the cinemas will all still be the same, the shops will still all be the same. It's not like they miraculously open in areas where they're not allowed to open just because the share price went up, and also the other way. It's not as if they're going to shut down and go, oh, you know what, we've got enough money now because the share price has gone up drastically, our equity is just through the roof at the moment, we're going to close down and not bother opening any shops. the business fundamentals still stay the same. The guidance doesn't really change because, well, this is a share price thing. It's not a business operation. So, it kind of irks me a little bit having Cuban to go through that. But I'm glad the question was asked, and I'm glad he put it out there, because if he didn't, well, I think a lot of people might have had the same question, actually.
The only thing that's really changed is the speed and the density and the reduction in friction for smaller traders to trade. That's the only thing that's changed.
Yeah, I mean, look, it's good news in terms of crowdsourcing, being able to have the same heft that some of these really big whales have on their own, if you can get this together. But we don't know who some of the people on the chat boards are, or in Reddit are, on these threads, who are saying some of these things, too. Do you worry that some of the Wall Street guys could get behind that, some of the big guys, and manipulate those things?
Yeah, but it's not really manipulation. It's absolutely no different than what has always happened, Becky. It's just these folks are picking things where, heavily shorted stocks. They'll go to low float stocks because they know they can flex and show off, and let people see what's going on. But look at it the other way. What if they go after companies that are really good, or maybe smaller companies that are have a great social mission, and get people not just to buy them in mass and quickly so the stock price skyrockets, but also to hold on to them, or, in cryptocurrency terms, hodl them so that, that company really can grow based off of the valuation of that stock. So I think now it's just a flex. They picked the right place to show off with these heavily shorted stocks. And, hopefully they'll go to good companies too and help them grow. And we'll see a positive side of this that hopefully will have long-lasting effects.
Nothing really more to add to that. Mark pretty much covered it. I mean, you can have a look at this at two ways, right? You can either go, well, a lot of people are going to make away with a lot of money and people are losing. And I think that's the route that CNBC and a lot of the media is taking, looking after some of the little guys who are going to lose money. But what's ironic and funny is that when big money makes all this money and the little guys lose money on like a daily basis, it doesn't get covered at all because we accepted it as part of the game. And yet now the little guys get to participate in that part of the game because there's no more friction. There's no more barriers. Robinhood, first one to come out. No commission trading. You can just go in. And the app and the platform is really good, apart from, the whole restricting and banning people from trading the particular stocks. But outside of that, Robinhood was the first platform that really opened the market up to the average Joe who really just wants to, dip his toes in the waters and just give it a go. And just like you mentioned in the interview, retail investors now essentially have voting power. They're able to hold on to stocks, diamond hands, that they really believe in, or businesses that they want to prop up because it is for a good cause. And therefore the valuation of the company slowly goes up as well, and they're able to leverage that or raise awareness for that cause or business model. So yeah, there's a lot of benefits in this that I think a lot of people aren't considering or thinking about. But also there's a lot of risk, and there's no denying that.
I think one thing this definitely does is shines a light on some of the behavior that regulators really should step in and take a look at. Some of the behavior by the hedge funds. If you're able to short more than 100% of a stock, if you don't have to disclose your shorts ever, if you can do one thing and say one thing and do another, I think that there could be a call for additional regulation coming on that. What are your thoughts there?
Well, I mean, if you're misleading, right? If you're pumping and dumping to the upside, or if you're shorting and misleading people to the downside, yes, that's obviously something the regulator should look at. But remember, when you short a stock, there's a VIG on it, right? You have to borrow it, and you're paying some percentage to the whoever owns the stock and is loaning it out. And as someone who's shorted stocks many times, when that VIG is high, you know exactly what you're getting into, and you know exactly what the risks are. And you just hope something like this doesn't happen. But again, it's not the first time that low float or heavily shorted stocks have been targeted. It's just very visible, and it's just not the normal suspects that are doing the targeting. There are many hedge funds that have made a lot of money over the years targeting heavily shorted stocks. And so I don't think this is anything different. It's just the people who are making the push aren't who we expect them to be. And so that's why I like it. When you bring people out of nowhere to really show the inefficiencies of the market, it's a good thing.
So that's Mark's response. I did not expect anything less. Straight down the line, just like he is on Shark Tank. He loves transparency. He loves fluidity, removing barriers. That's absolutely the top end of capitalism, entrepreneurship, Mark Cuban. But yes, that's it for this video, guys. I hope you guys enjoyed it. Leave a like, subscribe to the channel also, as I'll try to do daily videos which is, yeah, it's been really fun actually to follow all this stuff from Australia, waking up at 3 to 4 a.m. But that's it from me, guys. I'll catch you guys later. Cheers.